Hi everyone. Today I'm arriving at GetGo Home Loans offices in Bellville. Their offices are situated close to Tiger Valley. I am going to be interviewing Bjorn Prinsloo from GetGo Home Loans, and he's going to be answering a few questions regarding home loans. Thank you for taking the time out again today and meeting with me. I have a question I'd like to ask you today. I have a lot of first-time buyers that when I explain to them what costs they'd have to pay for upfront, your bond attorney costs and your transfer attorney's costs, they do not have access to that amount of money. What options are available to them? Should they take out a personal loan, or how should they, access that money?
Okay, so when it comes to fees and so forth, all the banks offer cost-inclusive bonds. So by cost-inclusive, what that means is they do not cover all the costs of the attorneys. They will normally apply up to 105%. But there's obviously a criteria based on the 105%. So the first one is, can you afford it? The second one would be, how does your credit score look like? And then obviously different banks have different criteria when it comes to qualifications and so forth. But I mean, when I speak to the client, I'll engage with them based on that. Okay. The additional 5% does not cover all costs, so the client would still have to fork out some funds when it comes to paying for the attorney fees. Okay. The reason that the banks would offer the 105% is obviously to try and ease it for the client, but I mean, it's still a responsibility from the client to pay a portion of it. When it comes to the interest rate, the cost inclusive would affect the interest rate. It would push it up a little bit because the bank is now overexposing themselves, if I could put it that way. Whereas the property is valued at 100%, but the bank is going above what it is. So yes, the interest rate would definitely get affected. The nice thing about it is some banks offer 50% discount as well on bond costs and so forth. So it's not an infinite. So it could be a campaign that they're running, a 3-month campaign. But obviously, as and when the client comes in and applies and so forth, we will know if we can offer them the 50% discount as well, if it's within the campaign period. And what we would not suggest is do not take out a personal loan if it's going to affect your affordability, because what the banks do further down the line, and it's stated in the contract that they can redo a credit assessment, and if they see that you took out a personal loan, they will reassess the application, and if it negatively affected your affordability, they can cancel the loan even a day before registration. They have to do that. So don't try your best not to. I mean, from our end, we will do the affordability assessment when we submit it to the banks, and when we have that conversation with the client, we will see there's sufficient affordability to maybe take out the loan, but do not go on your own. First, have the discussion with us. An alternative maybe suggestion would be if your work offers pension, if you have a pension fund at your work. So we've saved many deals in that way, where we would suggest to the client, go speak to your pension department and ask them if they can borrow you funds against your pension. So you would have to repay it back at a much lower interest rate than to the banks. And in that way, we've saved some deals as well.
All right, thank you for taking the time to chat to me, and look forward to catching up soon.
Thank you.